Hey, Mr. Wiedemer here. Welcome to Mr. Wiedemer's History. Today we're talking about Unit 9, the Great Depression, New Deal. Things are great in the Roaring '20s, but good times can't last forever. Things started going downhill in 1929, the Great Depression. This is 9.1. The stock market crashes. You guys be able to explain the causes of the Great Depression. Alright, starting out with the election 1920. Okay, a couple videos there you can watch, check out on the YouTube channel, Mr. Wiedemer History. Look over those a little bit about Great Depression, get a little more information. Alright, so the main issue of the election 1928 was Prohibition. Okay, we're in the midst of Prohibition, that's no alcohol, 18th Amendment. And both candidates vowed to continue Prohibition. So wasn't no debate on, I'm for it, you're against it, and whatnot. They both vowed to continue it. Hoover was a Republican. Alfred E. Smith was going to be a Democrat. Hoover represented a rural agrarian interest. Okay, he was an Iowa man. He was kind of a celebrity in a way, kind of a hero because he's really good financially. He's going to help out when disaster strikes in Louisiana and whatnot. He's going to really help out. And that in turn kind of helps them win the election as well. Alright, so Smith represented urban industrial interests, Hoover rural agrarian. He's going to help out, He represented the farmers. The farmers needed help more than anybody else, because we all know in the 1920s, farmers' life was not good. Most of people's lives were good. Alright, Smith was a Catholic. That's going to hurt him right away, because just like we'll see later on with JFK, if you have a Catholic president, maybe the Pope would be in charge. That's kind of a lot of people thought of that. So being a Catholic is very hard to become president. Hoover stated that the government should be an umpire instead of a player in an economic game. Okay, the government's there to watch the economy do its thing. Okay, if it gets out of line, we'll have to come in and interfere. But kind of more of a line, our laws are fair. We'll kind of do what we want. So Hoover, umpire instead of a player in an economic game. Prosperity is issue. The most damaging to Democrats because, well, the Republican president, in good times, you stay with your party. And that's what they did. Alright, Hoover's going to win the election by a landslide, 444 to 87. Hoover became the first presidential election, though, to lose the nation's 12 largest cities, but still win. Okay, that was unheard of. And still kind of today. Okay, they lost the nation's 12 largest cities, but still won the election thanks to the rural America. All right, and you see the election map. Hoover pretty much wiped up the map, clear. But you still see once again the solid South, the Democratic South, not quite as solid as it usually is, but you see right there in the South, Democrats, a little bit of Massachusetts, Rhode Island, but the rest all goes to Hoover. All right, when he took office in March 1929, he was full of optimism. Things are going to be good. We're going to continue to prosper in the 1920s. Everything's hunky-dory, grand, great. All right, except for like farmers, so he's going to tackle that right away. Okay, the Agriculture Marketing Act 1929 created this farm board. We're going to help the farmers out. Attempt to, at least. So we created a farm board, establishing co-ops. They lent money. Need to keep prices stable because farmers are overproducing and causing prices to go down low, and farmers were losing money. So when they needed it, they're going to keep prices stable here. All right, but it didn't help out, and farmers were now worse off than ever. They thought things were bad in the 1920s. Now Hoover comes in, tries to fix it, and things get worse. All right, plight of the farmers just keeps getting worse and worse and worse. But the rest of America is soon to follow. All right, so quick review. Hoover won the election in 1928. He immediately tried to help the farmers to no avail. Created a farm board. Did not help out much. Alright, the stock market crash. This is the big kahuna. This is the one that really, was the epicenter. Everything was coming to this. And this is kind of the straw that broke the camel's back, so to speak, and led us into the Depression. Alright, now, stock market, remember 1920s, first time common people can buy stocks. And, it's a good thing, but it was just going out of control. Okay, this prices tripled 1925, 1929, created a bull market, which is a strong market. All right, prices rose, more people started speculating. Okay, high risk, high reward. Okay, I'm gonna put this on. I'm gonna put $1,000 in here. I'm going to return investment of $5,000. Okay, high risk, high reward. All right. And so people bought shares and they thought would rise quickly. Okay, after the price went up, they would sell the stocks. Okay, this is called stock on margin. Okay, basically, I'm going to buy, a company. We'll say Ford. Okay, I'm going to buy stock in Ford, and I'm going to buy shares for $100. I'm going to sell it in a month time for $500 a share. I'm going to make a lot of money. That's what people were doing. They're buying cheap. All right, and the stock market went up so fast, so quickly that they got their money back. All right, and so as long as price continued to rise, things would be better. All right, things were good as long as the stock market would rise. But good things can't last forever. All right, stocks and companies were greatly overpriced in comparison to the earnings they're actually making. All right, that's not good. Federal Reserve Board advised banks not to loan money for buying stocks on margin. Okay, we can't be doing this anymore. This is going to be crazy. It's like a big bubble. It's going to boom. It's going to burst. And burst it did. October 29, 1929 is when it burst. But things are just ballooning out of control. And ordinary people aren't seeing this. They're like, I'm getting rich, y'all. Money, 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 money. And that's all they cared about. And according to them, things were going good. 1920s prosperity. Whoop, whoop. All right, but the market started to waver in September. People were like, oh, maybe the good times can't last forever. Speculators, people are pulling out. Okay, I'm done. I'm done with this. Prices are going down. I'm not making money anymore. Buy it for $100. I might sell it in a month for $50. Yeah, let's not do this. So more people got out. The stock market started going down and down and down, which led to Black Thursday, October 24th, 1929. Nearly 13 million shares of stocks frankly traded like crazy. All right. The businessmen tried to buy some worthless stocks to keep the stock market from falling because they can't have this fall. If this falls, it's going to be bad because everything's wrapped up in the stock market, including your bank money. Everything's wrapped up in the stock market. It can't fail. All right? So stock prices drop below the purchase price. That's not good at all. I mean, you buy it for $1, you sell it the next day for 25 cents. You're not making any money. You're losing money on the stock market. Brokers demanded that investors repay their loans. You gotta repay the loans. We can't keep doing this. Things are getting bad, 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 bad. All right? If you want to sell your stock, you're going to lose even more money. Just come on. Help us out. Do us a solid. All right? Then Black Tuesday happens. All right? Bankers try to shore up stock market, purchasing as many stock shares as they could. Kept buying, 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 buying. We got to keep it. Got to keep going. But then the bottom fell out. October 29th, 1929, Black Tuesday. The bottom fell out of the stock market, and things just went downhill from here. We said this is the straw that broke the camel's back that led to the Great Depression. Okay, Black Tuesday, October 29th, 1929. Don't forget that date. It's very, very important. And 60 million shares were sold, causing a collapse of the stock market. Cost investors about $30 billion. This is one day. Investors lost $30 billion. Not good. The bottom fell out. But 1.5 million investors were involved. Many people lost their entire life savings. So much that they had nowhere else to go. They were going to jump out of the New York Stock Exchange, jump out of the building. Okay, suicide rates went through the roof on this day. Okay, and another problem was not just if you didn't have any money in the stock market, but you had it all in the bank. But guess what? The bank had their money in the stock market, so all the money you thought was safe and secure in the bank. Well, guess what? It's not safe and secure in the bank because they lost all your money in the stock market. So the banks are starting to fall and fail. All right, so many banks went bankrupt, gone. Okay, we had people lining up for hours, bank runs. I gotta get my money out of the bank. Gotta get my money out of the bank. There's only so much money the bank had on their person, and so a lot of people didn't get their bank. They lost all their money. All right, millions of people lost everything they had. Everything they had gone. Bank failures skyrocketed up from 1929 on up. You see, Black Tuesday. Look at this. That is just a massive drop in the stock market in one day. Crazy. Prices just plummeted after a record high in 1929, plummeting, skyrocketed down. It's going to hurt the economy. It's going to hurt everything. All right, quick review. The stock market crashed on Black Tuesday, October 29, 1929. Jumpstart the Great Depression. Many people lost everything they had. Suicide rates went through the roof. People invested money in the bank. The bank lost your money. It was just madhouse. It's a madhouse. All right, some causes of Great Depression besides the stock market, which broke the camel's back. All right, automobile sales are going to decline, which less demand for textiles, oil, steel, and rubber, which slowed industry down, which causes lower wages, higher unemployment. Okay, at height of depression, we had 25% unemployment. Crazy. Today we have like 6.5% unemployment. Okay, it's 25%. A quarter of all Americans are out of a job during the Great Depression. Nuts. All right. This helped further contribute to the decline of automobiles and just kept going and going and going. Not a good idea. So we're going to look at some main causes of the Great Depression. Alright, so we all know the stock market crashed. That was the beginning. But things are piling up. Alright, piling up a long time before the stock market crashed. Alright, first one, overproduction. Overproduction in factories and overproduction in farming. Okay, overproduction in farming, as we all know, led to the farmers having little nothing because their stuff is not worth as much because they weren't making enough money because they overproduced it. Factories overproduced stuff, so they had no need to hire employees or keep employees anymore because they had all the stuff they needed, so it laid off a lot of employees. And so overproduction of goods, and that stuff just set in warehouses. So overproduction of goods and farming. Also installment buying. People were just buying stuff without having the money, and kind of like a credit card, and then they don't have the means to pay off this credit card because they lost it all. And so, installment buying. 1920s, remember, everything was good, great in 1920s. People were just buying stuff. I'm going to buy this car on installment payment. I'm going to make payments every month. All right, we still do that today. All right, similar to today's credit cards and loans. All right, most consumers use installment buying when purchasing high items such like the automobile. All right, consumer spending began to decrease in 1929. Next up, underconsumption. The rich are getting richer and the poor are getting poorer. Okay, this is hurting American consumer power because most Americans weren't the rich. Most Americans were the poor, and their consumer power, their power to buy stuff, went down. Okay, underconsumption. They weren't consuming the goods that they once were in the middle 1920s. Alright, underconsumption, overproduction, underconsumption. 3, prolonged support agriculture. Okay, we've talked about this, how life of the farmer in the 1920s was bad, and now the rest of America is going to catch up to them here. Okay, the big thing is overproduction. They overproduced goods. With new technology, you can be able to do that. They're going to overproduce. Alright, so prolonged slump in agriculture. So another cause of Great Depression. Okay, and this led to underconsumption because farmers didn't have money to buy anything. Alright, and fourth, tariffs and taxes. Many economic policies may begin a decade hurt the economy by the end of the decade, such as high tariffs of the Ford-Nima-Cumber tariff. And so we're going to raise our tariffs, so other countries are going to raise their tariffs, and no one wins. Alright, no one wins. And we insisted on collecting war debt. Okay, we're going to destroy the foreign markets. I mean, this all really stems from after World War I. Okay, good times can't last. Good times can't last. So tariffs and taxes. We kind of done it to ourselves. Alright, so the Mellon tax led to uneven distribution of wealth. Failure to discourage stock market's early boom made crash even more severe. They thought, it would never end. This would be the greatest thing ever. We're going to get rich. And little did they know that it all came crashing down. Thousands of workers were laid off. People stopped buying. They couldn't pay mortgage. They couldn't pay their houses. They were, homeless, jobless. America was falling apart. Fear overcame America. Alright, unemployment skyrockets after the stock market crashed in 1929. Alright, lesson review. Hoover won the election in 1928. He immediately tried to help farmers. Created a farm board. Did not help. Farmers' lives were still not good. Alright, stock market crashed Black Tuesday, October 29, 1929. This was the straw that broke the camel's back, which really jump-started the Great Depression right here. Many people lost everything, including their lives. Alright, cause of Great Depression, overproduction of farming products and consumer products, underconsumption, prolonged agriculture, high tariffs and taxes, fear became America. Okay, banking policies were unsound and led to overexpansion of credit. Okay, things went from good to horrible. Alright, seamlessly overnight, but these things were building. Alright, it seems like October 29, 1929, that's the date that the Great Depression really started, but they're coming. All right, till next time, study history.